Hi everyone, welcome back to Sahab Academy. Today in the 7th video of internal reconstruction chapter, we're going to solve our 5th problem, which is illustration 5 from the ICI study material. And this question is a bit tricky one because here the information is not given to you as usual. No, it's very different. Here the information is given to you from the point of view of a person called as receiver. Now who is this receiver? See, Companies Act gives a right to debenture holders, gives power to debenture holders to appoint a person called as receiver who will manage their interest. Okay, so receiver will be what? He will be selling off the assets which are secured, and the money which is received, it will be given to debenture holders timely. Okay, that's the duty of receiver. Fine. So information is given from that point of view, from this person's point of view, not as usual how we have in the previous questions. Fine. So that is why the language over here and the information over here, to understand it, becomes a little bit technical. Okay, don't worry, at the end of this video you will see how simple it was. Okay, it's just that little bit carefully you have to do this. All right, so let's just understand the question and let's just solve this. Okay, now see here, let's read the question. Repair Limited is in the hands of a receiver for debenture holders who hold a charge on all assets except uncalled capital. Now what does this mean? It means that, see, Repair Limited is on the verge of liquidation. You all know. So what they are trying to do is they are trying to save the company by going for internal reconstruction. Okay, and now this company is in the hands of a receiver. How is it in the hands of a receiver? Because see, what happened was debenture holders have gone to court and they have got the power to appoint a receiver. Is that clear? Receiver, because the Companies Act gives the power to debenture holders to appoint such a person, such an individual who will manage their affairs, who will make sure that they get the payment timely. Okay, so receiver will be selling off the charged assets, and whatever the money is received, he will be making the payments to debenture holders, right? Whatever that is owed to them. Fine. Yes, so that's what they are trying to say in this first sentence. And then they have said that debenture holders have a charge on all assets except uncalled capital. Whatever uncalled capital is there now, see here, 6,000 equity shares are there of face value 60 and 30 is paid up. These are partly paid up shares. So remaining 30 is still yet to come, right? Still yet to be called. So that 30 rupees per share is what? There is no charge on that. Okay, that is the uncalled capital. Is that clear? Yes, but all these things are not important for us. Okay, it's important from the liquidation chapter, from the liquidation point of view, but here we are doing internal reconstruction, so most of the things are irrelevant over here. Okay, so it's just that the the language is kind of like liquidation language over here, but we have to convert this and properly understand from the point of view of internal reconstruction only. Okay, so we'll do that. See here, then they are saying Repair Limited gives the following information as regards creditors on 31st March 2021. Okay, so here we have been given information of the creditors. Okay, so see, first we have property, plant and equipment, 3,90,000 in the bracket they have given cost, which is the book value, which is important for us in internal reconstruction. But then they are saying estimated at 1,50,000. Why have they given this 1,50,000? See, that's what I said. This is important from the liquidations point of view, because this is the point of view of receiver. Okay, in the company the PPE book value is 3,90,000, and this is what is important for us in internal reconstruction. Okay, we play with the book values in internal reconstruction, not the market values and all, not the fair values. Fine. Okay, then they are saying cash in hand of the receiver 2,70,000. Okay, so in total 4,20,000, right? And then uncalled capital is 1,80,000. How it's 1,80,000? Really simple now. 6,000 shares into the remaining amount. Yeah, 30 only. 30 is paid up. So what is pending? 30 is pending. Yeah, 30 is uncalled. So 6,000 into 30, 6,000 shares into 30, that's equal to 1,80,000. Okay, so that's the uncalled capital they have given. If there is a need, then we can call this 1,80,000 capital. That's what they are trying to say. And then they have given us something called as deficiency. Now this deficiency means the money is not enough. Money is not enough by how much? By 7,50,000 to make all the payments to all the creditors. Okay, the debentures holders and creditors, unsecured creditors. Okay, so see here, and then the capital is given. You already know, 6,000 shares of rupees 60 each, 30 paid up, 1,80,000. Now this deficiency and all are not important for us. Okay, it's not important for us in this internal reconstruction chapter. Okay, it's just given over there. And then see here, first debentures 3 lakh, second debentures 6 lakhs, unsecured trade payables 4 lakh 50,000. Okay, so now I will just explain to you how this deficiency is coming 7 lakh 50. See here, in total, if you will add up all the creditors, including the debenture holders, first debentures are of 3 lakhs, yeah, and then second debentures are of 6 lakhs, all right, and then unsecured trade payables, or you can say unsecured creditors, are 4 lakh 50,000 plus 4 lakh 50,000, that's equal to 13 lakh 50,000. So this is the payment that has to be done. Okay, this is the liabilities outstanding. So now what does the receiver has? He has 1 lakh 50 which he expects to get by selling of the PP, and then he has the cash in hand, that is 2 lakh 70. In total that's 4 lakh 20, right? He has 4 lakh 20, and then he still thinks that he can get the cash by calling the capital, right? By calling the making the final call and getting the 1 lakh 80,000. So 13 lakh 50 minus 4 lakh 20, okay, minus 1 lakh 80. This cash also he can have now, 1 lakh 80. Yes, there is no charge, but he can use it, right? So that's equal to 7 lakh 50,000, isn't it? How much? 7 lakh 50. So this 7 lakh 50 means what? This cannot be paid. Even after doing all this cannot be paid. That's what they are trying to say. So that's deficiency, 7 lakh 50. Is that clear? That's how it's coming. But all this is not important from the internal reconstruction point of view, so don't worry. Okay, so now this is the thing. Then they have given us the scheme of reconstruction. Okay, here they are trying to tell us, regarding two people, A and B. So we'll see that, don't worry, while passing the journal entries. The following scheme of reconstruction is proposed. Okay, there are some adjustments, 4 adjustments over here. And then see, assuming that scheme is duly approved by all parties interested and by the court, give the necessary journal entries. Now the first thing that we have to do is not pass the journal entries, we have to find out the information properly. Yes, we have the information over here, but we have to convert this. Okay, so the first working note, and we have to calculate one more thing. Understand, here the loss is not given. Why are we going for internal reconstruction? Because Repair Limited is on the verge of liquidation. Why it is on the verge of liquidation? Of course, this company is making losses year by year, right? Yes, this company is making losses. So where is the loss? Loss is not given to us. So we have to calculate the loss. So how will we calculate the loss? Really simple. Just use this information and put in a rough horizontal balance sheet. Okay. See, I have done over here. Working note number 1, ascertainment of profit and loss account debit balance at the time of reconstruction. Okay. Equity and liabilities. It's simple this way. Okay. I know it's not the actual balance sheet now, but yeah, it's just a rough horizontal balance sheet just for the calculation purpose. Okay. So see, equity share capital 1 lakh 80. We have this over here. Okay, then first debenture, second debenture, creditors, that's same only now. 3 lakh, 6 lakh, 4 lakh 50. Okay, 3 lakh, 6 lakh, 4 lakh 50. Fine. So in total the liabilities are how much? 15 lakh 30,000. And then PP book value you will take, not this 1 lakh 50. Okay, not this, 3 lakh 90,000. So 3 lakh 90,000. And then cash, it's given over here 2 lakh 70. So you will take the cash 2 lakh 70. And then see here, you will find out the balancing figure as the profit and loss debit balance. Okay, see here, let me just do the calculation. 1 lakh 80 plus 3 lakhs plus 6 lakhs plus 4 lakh 50, that's equal to 15 lakh 30 total. So write this on both the sides. 15 lakh 30 minus 3 lakh 90 minus 2 lakh 70, that's equal to 8 lakh 70. So there is a gap of 8 lakh 70 on the asset side, and that is of course what? The loss. Okay, profit and loss account debit balance 8 lakh 70. This is the balancing figure. So this is how you will find out. Now to solve the question, what you have to do, you have to just look over here in this working note. This is your question now. Okay, by looking at this question, you can easily pass the journal entries. Okay, so we have converted this kind of difficult presentation into a much simpler one. Okay, fine. So now let's just pass the journal entries by going through each of the adjustments. Okay, let's do that. Now see here, we have the solution. We have to pass the journal entries in the books of Repair Limited one by one by looking at the adjustments. So let's read what they're saying in the adjustments. See here, A holds the first debentures for 3 lakhs and second debentures for 3 lakh. He's also an unsecured creditor for 90,000. So here what's happening, here the question is talking about a specific person called as Mr. A, right? The question is saying that there is a person called as Mr. A who is our debenture holder and also an unsecured creditor. So what is his interest in our company? How much is his interest, his amount in our company? See, they are saying A holds the first debentures for 3 lakhs. So first debenture is entirely owned by Mr. A, and then second debentures for 3 lakh. So out of this 6 lakh second debentures are there now, 3 lakh are debentures of A, and then he is also an unsecured creditor for 90,000. Out of this 4 lakh 50 unsecured creditors, yeah, unsecured trade payables, 90,000 are owed to him. Is that clear? Yes. So whenever such a thing happens in the question of internal reconstruction, see here, whenever question talks about a specific person like Mr. A over here, then what we have to do is, and this Mr. A is our debenture holder as well as creditor, then make sure first you transfer their interest, their amounts to a personal liability account of that person, okay? And that's what we will do in the journal entry, because here they are talking about a specific person, Mr. A, and then there will be adjustment, yeah, in the scheme of reconstruction, there will be adjustment regarding this Mr. A. So first what you have to do, the first step should be whatever amounts are there regarding Mr. A, transfer all that in a personal liability account of Mr. A. Okay, I will show how to do that. It's really simple. See, to a personal liability account of that person, and then do the internal reconstruction and then carry out the scheme. Okay, see how it will happen. It's really simple. They told us now 3 lakh and 90,000, right? First debenture 3 lakh, second debenture 3 lakh, and unsecured creditor 90,000. So all these are liabilities now. They all have which balance? They all have credit balance. So you have to finish them off. Okay, see, first debentures account debit, finished. Second debentures account debit, finished by 3 lakh. Unsecured creditors account debit, 90,000, finished by 90,000. Yeah. So you will cancel all these liabilities from our company's books and you will transfer that to a personal liability account of that person. Okay, to Mr. A account, 6,90,000. So now what has happened in our company's books? In our company's books, we have accepted that, we have to pay 6,90,000. Have to pay. There is a liability arising over here. We have to pay 6,90,000 to Mr. A. Is that clear? That's the logic. It becomes easier this way. Okay, and you have to pass separate entries now. So this one entry you will pass. You have cancelled all the liabilities of Mr. A and transferred to his personal account. Is that clear? Easy. This is what you always will do. Okay, whenever question talks about a specific person like Mr. A, Mr. Whatever, Mohit, Rohit, whatever is there. Fine. Okay, fine. Then come to the scheme of reconstruction. They are also talking about B also, but we'll see that later. Come to the scheme of reconstruction. The following scheme of reconstruction is proposed. A is to cancel 2,10,000 of the total debt owing to him. Stop right there. Okay. Understand, you have to do everything separately over here. Otherwise, you'll make mistakes. You have to go slow, read properly, and then, portion by portion, you have to do it, right? Piece by piece. So see, they are saying A is to cancel 2,10,000 of the total debt owing to him, which basically means that we don't have to pay 2,10,000 to Mr. A. It has been foregone by him, right? So let's just pass that entry. Okay. See, how will you do that? It's really simple. You all know we have to pay 6,90,000 now. So there is a credit balance of 6,90,000. So out of this, you will cancel the 2,10,000. Yeah, here it is credited now. We have to pay. So here you will debit it. Yeah, opposite debit you will make. A's account debit 2,10,000. We don't have to pay A 2,10,000. You're cancelling the liability to Mr. A of how much? 2,10,000. And do we have to give him anything for this waive off? No, nothing. Nothing. It's a gain for us. We have made a settlement with Mr. A, right? So this entire 2,10,000 will go where? It's a gain. It will go to capital reduction account. 2,10,000. Simple, easy. Okay. Yes. And then they are saying, see here, to bring 30,000 in cash and to take first debentures in cancellation of those already issued to him for 5,10,000 in satisfaction of all his claims. Okay. So understand what is happening over here. We had to pay to Mr. A 6,90,000. Yes. So how much was waived off? 2,10,000. he had foregone, right? He has foregone 2,10,000. So we have to pay 4,80,000 in the books, in the repair limited books. 4,80,000 needs to be paid to Mr. A. But then what they are saying, that they are saying Mr. A is going to give us 30,000 rupees, okay, 30,000 cash, and we are going to give him 5,10,000 in satisfaction of all his claims. I mean the debentures worth 5,10,000. Okay, so see, he is going to bring in 30,000. So that means the liability kind of increases, right? So plus 30,000 he's going to bring. Okay, so 5,10,000. Then we are going to give him minus 5,10,000. Okay, debentures, we are giving him 5,10,000 worth of debentures. So then A's account will become 0. Okay, let me just show you the flow chart. It's really simple. Okay, understand, it's not difficult. There was Mr. A. We transferred all his liabilities, yeah, all our liabilities to him, to his personal account, 6,90,000. So 6,90,000 was our liability. We have to pay 6,90,000 to Mr. A. Out of this, what happened? 2,10,000 was waived off. He has foregone that. So that went to capital reduction as the gain. Then what happened? They told us Mr. A gave us cash. Yeah, he brought in cash 30,000, and we have given debentures of 5,10,000. Okay, we issued first debentures of 5,10,000. So we have to pass the journal entry for this. It's really simple. Don't worry. It's not difficult. See here, cash account debit. Yeah, we have got 30,000 now from Mr. A. So yes, cash account debit, or bank account also, whatever you want, you can take. So cash account debit 30,000, and you will credit A's account because you have got the money from A now to A's account 30,000. Is that clear? Simple. And then we issued debentures of 5,10,000. So see here, A's account debit 5,10,000 to first debentures account 5,10,000. Easy. Yeah, see here what they are saying. We have given debentures of 5,10,000. Yes, so that's why we have to pass this entry. A's account debit. Yeah, here it was credited now, so we are cancelling his account now. A's account debit 5,10,000 to first debentures. Debentures are liability. If you want to issue debentures, you have to credit them to first debentures 5,10,000. Is that clear? Simple and straightforward. Okay, so the first adjustment is over. Okay, now let's move on. Now see here the second adjustment. B is to accept 90,000 in cash in satisfaction of all claims by him. So here the question is talking about this Mr. B, but we don't know who is this Mr. B. So let's understand first. Okay, see, come to this para. B holds second debentures for 3 lakhs and is an unsecured trade payables for 60,000. So here they are saying us that in the second debentures of 6 lakh, 3 lakh are owned by Mr. B. Okay, and then in this unsecured trade payables of 4,50,000, 60,000 are his trade payables. Yeah, we owe 60,000 to Mr. B in among this 4,50,000. Is that clear? Yes. So we have understood who is Mr. B. Now, whenever the question talks about a specific person, what we have to do before passing the journal entries and everything, first what we have to do is, you all know, we transfer their amounts, yeah, their interest to their personal account, yeah, liability account, isn't it? That's what we did with Mr. A also. Yeah, I told you. So the same thing we have to do. So how much are the amounts of this Mr. B? 3 lakh and 60,000. So in total 3,60,000. So 3,60,000 will be transferred to Mr. B account, and whatever liabilities are there now to Mr. B, second debentures and unsecured trade payables of 3,60,000, those have to be cancelled, right? So let's pass the journal entry for that. See, it's really simple. Second debentures account debit 3 lakh cancelled. Yeah, how do you cancel the liability? By debiting it. It has credit balance. To cancel, you have to debit. Unsecured creditors account debit 60,000, and then some of this 3,60,000 will flow to B's account. Okay, to B's account. So in our books of Repair Limited, we have accepted as a company that we have to pay 3,60,000 to Mr. B. Is that clear? Simple as that. And then come to the scheme of reconstruction. They are saying, see in the second point, B is to accept 90,000 in cash in satisfaction of all claims by him. Yeah, full settlement. Is that clear? So see, how much did we have to pay to Mr. B? 3,60,000. We had to pay 3,60,000, and he has accepted how much? just 90,000 in full settlement, right? So minus 90,000, that's equal to remaining 2,70,000, which we didn't have to pay. So this is what? This is a gain for us, and this gain we will take into capital reduction account. Yes, you all know that. So what will be the entry for the, for this adjustment? The entry will be very simple. See, first you will cancel this liability to Mr. B, 3,60,000 debit, yeah, equal debit you will make, B's account debit 3,60,000 because entire full settlement now, so that's why 3,60,000 debit. And then how much did we pay? We paid 90,000 to cash account, 90,000, simple. And then the remaining balance will go to capital reduction account, 2,70,000. Is that clear? Simple and straightforward. Fine. You can see over here there was a Mr. B person who had 3 lakh second debentures and 60,000 unsecured creditors, right? We owed 60,000 among the 4,50,000 creditors, right? So total was 3,60,000 amount. We transferred that amount to his personal liability account, and then we came to know that in the adjustment 90,000 he accepted in full settlement. So the remaining 2,70,000 we didn't have to pay. It was waived off. Yeah, it was foregone by Mr. B. So this is our gain which went to capital reduction. Simple and straightforward. Fine. Okay, now let's move on to the third adjustment. Now see here the third adjustment. In full settlement of 75% of the claim, unsecured creditors other than A and B, stop right there. Here this adjustment is talking about whom? Talking about unsecured creditors other than A and B. So first we need to know who is this, yeah, what is their amount, right? That's what we have to know first. So let's calculate that. And then they're talking about 75% of this. So first let's understand who are these unsecured creditors other than A and B. Okay, what's their amount? That's very important. Always remember, whenever you have such kind of huge adjustments, always cut it piece by piece and understand. Okay, so who are these unsecured creditors other than A and B? It's really simple. See, total unsecured creditors were how much? 4,50,000. Unsecured trade payables 4,50,000. And then out of this, how much did we owe to Mr. A? We owed 90,000 to Mr. A, isn't it? He is also an unsecured creditor for 90,000. Who? A. So minus 90,000 which was due to A. They said other than A and B now, so we have to exclude A and B. Okay, and then B had unsecured trade payables for 60,000. Yeah, out of this 4,50,000, 60,000 was owed to Mr. B. So that also we have to exclude. So how much is remaining? 3 lakh, isn't it? 450 minus 90 minus 60, that's equal to 3 lakhs, right? So 3 lakhs is the unsecured creditor other than A and B. Now let's see what is the adjustment saying. In full settlement of 75% of the claim, they're talking about 75% of the claim. So let's calculate 75% of 3 lakh. Okay, 3 lakhs into 0.75, that's equal to 2,25,000. Okay, see here 75%, 2,25,000. And what's the remaining 25? We'll see that later. Remaining 25 is how much? 75,000, isn't it? That's 75,000. Okay, we'll see that later what the adjustment is saying. First let's just understand what the adjustment is saying regarding 75% of the claim. In full settlement of 75% of the claim, unsecured creditors other than A and B agreed to accept 4 shares of 7.50 each, fully paid against their claim for each amount of rupees 60, for each share of rupees 60. Now stop right here. Here most of the students get confused. What are they trying to say? See, they are saying that the company is going to give them how much? The company is going to give them 4 equity shares of rupees 7.50 each. But what's the ratio? The ratio is fully paid against their claim for each share of rupees 60. Okay, now most of the people think here also they are talking about equity share. No, here they are not talking about equity share. Yes, it's obvious that you can get confused because here the face value of the share is also rupees 60. So you might think they are talking about equity share over here also. No, they are not talking about equity share. They don't have equity shares. They are our creditors, right? So they are talking about their claim, their amount. Okay, and this is general share. For example, let's just say there's one chocolate and you have divided the chocolate between 2 brothers, right? So each brother has got half a share, right? So this general term share, not equity shares and all, general term share, right? That's what they are trying to say over here. All right, fully paid against their claim for each amount of rupees 60. So now let's just simplify this even further in that flow chart. Okay, see the flow chart over here properly. For every of their 60 rupees, that's what they are trying to say. Understand, for every of their 60 rupees, the company is giving them 4 equity shares of rupees 7.50 each. This is the ratio. Okay, so can you convert this sentence in a fraction? Can you convert? Because always what do? We convert the ratios, we convert these sentences in a proper ratio, in the proper fraction, right? So how will you convert? It's really simple. Understand, for the calculation purpose you have to understand this properly. 60 is there. Okay, fine. For every 60, how much we are giving? We are giving 4 equity shares of rupees 7.50 each. Convert in amounts. See, 4 equity shares of 7.5 each, right? So that's equal to 30 rupees. For every of their 60 rupees, we are giving how much? 30. Is that clear? See, for every of their 60 rupees, we are giving how much? 4 into 7.5? 30 rupees. So this is our ratio, 30 by 60. We are giving 30 for every of their 60 rupees. Okay, so this is the ratio, 30 divided by 60. Is that clear? You remember in bonus and in right issue and all, we used to have ratio. Yeah, just in the previous problem we have seen, isn't it? For every of their, we are giving 3 shares for every of their 1 share. Yeah, we are giving 2 shares for every of their 5 shares. Yeah, 2 by 5, 3 for 1, isn't it? The same way here also you have to understand, it is 30 for every of their 60 rupees, 30 by 60. That's how you will do the calculation. Okay, see the calculation over here and see, understand, 60 for every of their 60 we are giving 30 now. So what about remaining 30? Remaining 30 is waived off. Okay, we are not giving, we are just giving half. So remaining 30 is waived off, that has to go to capital reduction. Now we will see how the calculation will happen. See, really simple. You can easily calculate the value of equity shares. Yeah, what's the value of equity share? You can easily calculate. You will take 2,25,000, okay, into 30 divided by 60, the ratio. For every of their 60 we are giving 30 now. So numerator will be what we are giving. We are giving 30, and what they are bringing, for what's their claim? 60, isn't it? 2,25,000 into 30 divided by 60, that's equal to 1,12,500. So we are going to give them equity shares worth 1,12,500 rupees. This is the amount, value of the shares. Okay, not one share, shares. Okay, all the shares. Value of equity shares, 2,25,000 divided by 60 into 30, right? It's a ratio. Fine. Whatever we are giving now, that has to be in numerator, and what is their claim, that has to be in denominator. Is that clear? Yes. And the number of shares you can easily calculate. If this is the amount, then just divide that by the face value. They told us the face value now. The face value they have said 7.5, right? Can you see? 7.5 they said. So divide by 7.5, 15,000 equity shares. See here, 1,12,500 is the amount. Divide by 7.5 face value. Number of shares is 15,000. Clear? Easy. And then how much will go in capital reduction? Easily you can calculate. See here, 2,25,000 was their claim, 75% claim. How much did we give? We gave only half. For every of their 60 rupees, we gave only 30. Half, na? Exactly half we gave. So you can just see 2,25,000 minus 1,12,500. Yeah, 2,25,000 was their claim, minus we gave them 1,12,500 worth of equity shares. So remaining is 1,12,500, which we didn't give, right? Which we didn't give. So this is the gain for us, and this will go to capital reduction account. Okay, is that clear? So see the journal entry, it's really simple. Journal entry is very small, this journal entry only, but the logic you have to understand properly. Once you have understood the logic, then you can easily do it in rough calculation. Okay, fine. So see, unsecured creditors account debit 2,25,000 separately we are doing. Okay, 75% separate, 25% separate, right? It's better, you will have more clarity and you will make less mistakes like this. Fine. So unsecured creditors account debit, you're cancelling of the creditors. Yeah, 2,25,000, and we are giving them share capital, right? Equity share capital. Yeah, equity shares. So credit the equity share capital account 7.5. Yeah, 15,000 into 7.5. This amount directly you can take, right? 1,12,500, and the remaining is capital reduction, the balancing figure. Okay, easy, you understood this, right? So this is over. Now come to this 25%, the remaining balance. See, they are saying the balance of 25% is to be postponed and to be payable at the end of 3 years from the date of court's approval of the scheme. right? So here see what's happening is unsecured trade payables are current liability, isn't it? It's current liability. It's mostly payable within 1 year. That's what we expect, right? This 4,50,000. But then because of the court order, what happened? This balance 25% was postponed, right? And it is payable at the end of 3 years. So this became non-current liability. It's not a current liability now, it's a non-current liability. So from unsecured trade payables, you have to convert this into a loan. It's kind of a loan, unsecured loan. Okay, it can't be creditors anymore. So that's why what you have to do, you have to debit the unsecured creditors and cancel it, and credit the loan and create that. Okay, that's how you create the liability. Okay, payable at the end of 3 years. So it's a non-current liability, and the amount now it's 75,000. 25% of 3 lakh, that's 75,000. So you will just debit the creditors and credit the loan. Really simple. Unsecured creditors account debit 75,000, and you will credit the loan, unsecured 75,000. Is that clear? Simple and straightforward. So by this, our third adjustment is also over, right? You understood? Yes. Now let's move on to the fourth adjustment. Now see the fourth adjustment. Uncalled capital is to be called up in full and 52.50 per share cancelled, thus making the shares of rupees 7.5 each. Now wait a minute, there are two things they are saying over here. First, let's just do the first thing, that is uncalled capital is to be called up in full. Let's do that. In this information here, you can see it was just 30 paid up. Still there was 30 rupees that you could call, and now the question is telling you please call that remaining amount, right? So you will do, you will make the final call. See, it's really simple, you all know this. Simple general entries. Share final call account debit 1,80,000 to equity share capital account 1,80,000. There are 6,000 equity shares from the question, so 6,000 into rupees 30, that's equal to 1,80,000. Fine, 1,80,000, 1,80,000. So you have made the call due, and then you have received the money, cash account debit or bank account, whatever you want, you can take it, to share final call. This dummy account which you open, share final call, here it was debited, you make an equal credit and you finish that off, right? Ultimately what happened? Ultimately bank account to equity share capital only. Fine. So 1,80,000, 1,80,000. Is that clear? Simple. So these two are the making the call and receiving the money. Fine. So the first part of the fourth adjustment is over. Uncalled capital has been called up in full. Clear? Easy. And then they are saying, and 52.5 per share cancelled, thus making the shares of 7.5 each. So here they are talking about reduction in the face value. At last they are doing this. Okay, so see what we have to do. Whenever there is a face value reduction, first you have to cancel the old capital and create the new capital, right? Cancel the old capital with the old face value and create the new capital with the new face value. So what was the old face value? 60 rupees. So debit that 60 rupees. See here, equity share capital account 60 rupees. What was the number of shares? 6,000 into 60, that's equal to 3,60,000. So you debit the equity share capital and cancel it off, and then you credit the new capital with the new face value. Okay, so new face value is 7.5. So 6,000 shares, that will not change, number of shares will remain same, into 7.5, that's equal to 45,000. So this is the new equity share capital. Okay, to equity share capital account 45,000. The difference between these two will go to capital reduction as always. Okay, 360 minus 45, that's equal to 3,15,000. So 3,15,000 will go to capital reduction account. Is that clear? Easy. And then what they are saying, is there anything else? No, that's all, right? And the nominal share capital is to be increased accordingly. Yeah, that's fine. If you are preparing the balance sheet, then we can do that over there. But here there is no need of preparing the balance sheet. Here the question has not asked that. Here just they have asked for the journal entries. Fine. So all the adjustments are over, just the big entries remaining, utilization of capital reduction. So how do we pass that? It's really simple, you all know. Check all the journal entries. Wherever there is capital reduction, consider that. In the first entry there is no capital reduction. In the second entry, yes, it's a credit of 2,10,000. So 2,10,000 plus 2,10,000. And then in the third, no. In the fourth, no. In the fifth, no. In the sixth entry, here there is capital reduction, again credit plus 2,70,000. Is that clear? That's how we do now. We check how much balance is there in capital reduction. So let's see. In the seventh entry, there is capital reduction of 1,12,500. 1,12,000. Sorry, 1,12,500 plus. In the 8th, no. In the 9th, no. 10th, no. In the 11th, yes, there is 3,15,000. Yes, 3,15,000. So in total, how much balance is there in capital reduction account? 9,07,500, right? 9,07,500. So what we have to do now? We have to write off the loss, isn't it? You all know now. So what was the loss? We have calculated the loss by preparing a rough horizontal balance sheet, isn't it? Or you can also prepare a statement. In the study material, they have prepared a statement. Okay, this also you can do. Asset, property, plant, cash, the same thing they have done. Okay, the book values they have taken, which was 6,60,000, and then they have subtracted the capital and all the liabilities. They have got 8,70,000 as the profit and loss debit balance. Okay, this is also fine. I have done this way. See here, the same thing only. It's the same thing. Here is just the presentation is a bit different. Yeah. So profit and loss debit balance was how much? 8,70,000. So now subtract that, minus 8,70,000, right? Yeah, 8,70,000. So that's equal to 37,500. Yeah, see here, capital reduction account debit 9,07,500, and then we subtracted the loss. We wrote off the loss. Yeah, 8,70,000, and whatever that was left at last was 37,500, and there was nothing, no patents, no fictitious asset, nothing to be written off. So the balance, remaining balance, this 37,500 has to go where? It has to go to capital reserve as usual. Okay, simple and straightforward, right? Now this question is not difficult. It's just that it was just a bit technical language. Yeah, that's all it was. But you have understood now, whenever the question talks about a specific person, what you have to do, you have to take all of their amounts to their personal account, which would be a liability account, and then carry out the scheme of reconstruction. Okay, that was the main point of this question. Okay, this thing, this note, right? So this is how you have to do it. And then you also saw this calculation, right? So that's all for this video. See you in the next video. Bye.